Hi, this is Chris Reddick with Chris Reddick Financial Planning. This blog post I talk about the only 4 funds you ever need, right? So the idea is, in what I talk about here is that investing is actually pretty simple, and it's broken down into, I think, 4 broad categories, and the industry has taken hold of this in the way it approaches investing. All right, so the main thing with investing, obviously, is you need to determine your tolerance for risk. So your risk tolerance. So how much risk can you take? So do you worry a lot if the stock market goes down 20%? What would you do if that happened? Have you experienced that? Okay, so your risk tolerance is really important. And the second thing is your risk capacity. So how much risk can you actually take? So if you lose this 20% of your money and you need that money to pay for bills and so forth, that's a capacity issue that you need to think about. All right, so the first thing, you need to discover your level of risk before you even start to invest. So you need to talk to a financial planner to learn about that and then determine a portfolio that matches your level of risk. But anyways, in this blog post, I talk about the only 4 funds you ever need, and much of the industry focuses on these 4 funds. So if you follow Vanguard's 4-fund portfolio on Bogglehead's websites and so forth, they talk about these 4 funds. So that's why I mentioned this article, the 4 funds you'll ever need. And the second approach is low-cost funds. So for this case, we would pick index funds. So index funds essentially just mirror the market, and you get market-like returns. So more actively managed funds typically have a fund manager that try to outperform the market, right? So what I emphasize is more passive index funds, and there's 4 funds. I'll talk a little bit about them. Okay, so the first fund is called the Total Stock Market Index Fund. So what is this? This is essentially an index fund that mirrors the entire U.S. stock market with a greater emphasis on larger cap or larger size companies in the U.S., but it is going to have medium companies and small companies, right? So it's going to have basically the entire U.S. stock market. That's where you get the idea, total stock market, right? Okay, so that's one fund. And the second one is a total international stock market. So instead of just focusing on the U.S., you want to be globally diversified. So you would add some international stocks, so non-U.S. stocks to your portfolio. So you have the idea of a total international. So instead of just total stock, total international means non-U.S. And then the third fund is a total bond index fund. So just like the total stock fund, it deals with the entire U.S. bond market in this case. Okay, so treasury bonds, municipal bonds, every type of bond that you would have in the U.S. is part of this index, with more emphasis on treasury bonds or federal government bonds. And then the fourth area is a total international bond index fund. So these are non-U.S. bonds, okay, in the fund. So other countries outside the U.S. and then how they use debt to finance projects and so forth. So I mentioned these are the 4 funds that you'll ever need. And this is common in many portfolios that you find. You would have some combination of these 4. All right, so it's best to talk to a financial planner to determine what is the proper combination of these 4 funds that you actually need, and then how it fits within your goals. So reach out to me and schedule some time, and we can look at your portfolio and look at your risk tolerance and capacity and see how these 4 funds fit into them. Have a great day.